A very good afternoon, friends. I welcome you all to this initiative of ASB titled as Leverage Legacy Leadership Series. Today's topic is the labor code. Labor code. Vivek, can you be on mute, please?
Yeah, sure, sir.
Yeah. Today's topic is labor code, accounting perspective, which matters. Friends, as you would notice, the title of this series is Leverage the Legacy uh, Leadership. Means capitalize on the benefit of the legacy of ASB and the leadership of ICAI. That's been the theme of this series. Uh, in this series, as keynote speakers, we have invited the past presidents of ICAI as well as the past chairman of Accounting Standard Board so that our audience can benefit apart from the benefit of the knowledge of the faculty, but the various perspectives which ICAI has kept in mind from time to time. So in this series, this is the first one in this new year 2026. So first of all, I wish you a very, very happy and prosperous new year 2026. And it gives me real immense pleasure to introduce to you. Of course, you all know him, but a very, very dear friend and my past president, CA Aniket Bhai Talati from Ahmedabad. Young and dynamic leader of ICI, you know, who was the torchbearer of the profession as the vice president during the World Congress of Accountant, which was held, and was the president when the G20 and B20 were held. And ICI got the privilege of being associated as a partner in the B20. Aniket's by personality is, beyond words, very dynamic. And I've seen during his 2 years as vice president and president, there'll not be a single paper pending on his table. He will clear his table every day. And he is known for taking bold decisions. I have headed, I was given the responsibility of public relation committee and uh, an altogether different area for me. But under his leadership, we made the best of it. So that's his ability. He can get the unusual tasks done from people of different background and always smiling, leads from the front. So he has been the chairman of FRRB also for 2 years, and that time he has cleared maximum number of cases. Came out with a publication, the first ever on the Ind AS. He has successfully steered uh, the highest role in the Institute of Chartered Accountant of India, and I've lived every day along with him. So it's indeed a pleasure that he's here with us. And accounting is no longer historical now. It's also changing, very dynamic. There used to be time when accountants were criticized as that fine, your job is to do that the same thing, same mundane things over and over again. But now we see that this is one field on which there are annual improvements, and then there are multiple times in a year there are changes, there are new standards which are being brought. And one such remarkable change which has happened is a labor code. Uh, this labor code has come into effect from 21st November 2025, and these codes consolidate 29 existing labor laws into four comprehensive framework: the code on wages, the code on social security, the industrial relation code, and the occupational safety, health and working conditions code. Their impact extends beyond employees and employers, reaching into accounting and financial reporting practices. One of the most significant change is the revised definition of wages, mandating that at least 50% of the total remuneration will be treated as wages. This change is expected to increase the gratuity and leave benefit liability for many employer where this was less than 50%. If it is already 50% or more than that, then the impact is not likely to be there. So we were receiving a lot of requests for issuing clarifications on the accounting implications. And mind it, this code was announced on 21st of November 2025. We quickly convened the Accounting Standard Board meeting, And in accounting standard board meeting, many issues were highlighted. So we thought that these issues would require more detailed discussion. So we adjourned the meeting, gave a week's time to the group, and held the accounting standard board meeting on the very eighth day of the adjournment of the meeting, so that the 7 days time given to the group is over. And on the very same day, on the conclusion of the adjourned meeting, we took the president office approval and issued these FAQs. And these FAQs clarify the accounting treatment of these changes. These are whether they fall under AS 15 for those who are not following Ind AS, or under Ind AS 19, that is those who are following the Ind AS. So I really commend all the members of the Accounting Standard Board, which are a staggering 76 in number, the Accounting Standard Board members, for this quick work. And there was a unanimous view. There was not even one single difference of opinion in arriving at these FAQs. So this is, I mean, you can say that this is, but this need was felt both by practitioners as well as by the preparers of the financial statement, and ASBs rose to the occasion as always and brought this. So today we will have CA Praveen Kumarji, who is a very well experienced auditor, and has been contributing extensively to the Institute of Chartered Accountant of India in various capacities. He was with us as a special invitee auditing and assurance standard board for 3 years during my term as the chairman of the AASB, and he has adorned many of the committees of the ICI. And we have Vivek Harsh as the moderator. See the spirit of our chartered accountant. His hand is fractured, but still he's there smiling. So that's what I mean. The profession stands for. So I would encourage all participants to actively engage, share the experience, and contribute to shaping the profession's response to these changes, as well as the ASB's initiative. We always look for more and more contributors, faculties. This year, friends, we have started the training programs for the CNAG officers. It's a 32-day long residential program, and we are already into the 5th batch, and we have to do about 90 batches. We have also prepared the e-learning material for the CNAG officers at a very, very short notice. 22 modules are already ready. We have done training for the Security Exchange Board of India for some very specific purpose. Similarly, we have done the training for the NSDL, Himachal Pradesh Electricity Board, apart from our usual certificate courses on Ind AS and the physical seminars and the webinars, etc. And this is in addition to the routine work of ASB that is keeping pace with the changes. And recently, Ind AS 118 was also discussed in the NFRA meetings. So I sincerely hope that these initiatives will add a lot of value to all of you. And once again, I welcome all of you and thank you for taking out your time. And I invite my very esteemed dear friend, C. Aniket Talati ji, our Honorable Past President, for his keynote address. Thank you, and over to you, Aniket Bhai.
Thank you so much, Sanjeev Bhai, and let me compliment you. I think you mentioned about Mr. Vivek Harsh being indisposed, but you have also not been keeping the best of health, and yet you've been here, there to start this very important series. So let me first and foremost begin sincerely by complimenting you and the ASB. Many times people say that, institute is not the first one off the block. Have we always taken that leadership? But your series is titled as Legacy and Leadership. I've always believed that Institute has always been a great leader, and that is why we enjoy this legacy, especially ASB. And I think today, once again, when you had the opportunity, you have proven not just to the members, but to the society, regulators, and the entire economic system of India as a whole, that we are very decisive in terms of stating what becomes applicable when and how it is to be implemented. I was delighted to see, like many of the participants, I saw the news article that the opinion of the ASB has been very clearly laid out, and therefore I think you have put the ball or the onus in the court of the preparers, very clearly stating that we expect that as of 31st of December, since you rightly mentioned that as of 21st November, this code is now is active and applicable, and therefore it will change the dynamics of a lot of aspects in terms of how emoluments are measured, how provisioning is done for retirement benefits, and of course everything else that has an accounting implication relating to employee benefits, maybe post-employment, retirement, or otherwise. And I'm sure this has come out in a timely manner and has very clearly laid out the expectation from the preparer community, that is the companies, that you will have to start accounting for it. Many were hoping that, look, this will probably be a March issue for us to take care, and therefore they would have tried to put it under the mat. I think at least the expectation is there. And I'm sure now for our auditors who are on the side of reviewing, I wouldn't call them auditors for this purpose since the December quarter is only a review, and therefore they are in the shoes as of a reviewer, will sufficiently make sure that whatever has to be done in terms of assessing the quantum of the impact and whether it makes a material impact on the financial statements and suitably modifying the review report or otherwise, or what disclosure that is required will be taken up. But I think truly phenomenal, Sanjeev Bhai, that you have three L's: legacy, of course, leveraging the legacy, and leadership looking into the future. And I think now you have the fourth L in the form of labor. So as you have a 360-degree title, you also have the four L's or the four directions in which one will have to move. We have, of course, our legacy, which is our past. We have to leverage that. But I think leadership is for the future, and how labor code, I think, is going to impact it is going to be very, very important. Delighted to have Parveenji, who's again a very important resource person. I have worked with him in multiple capacities that he, I think, bestows as a member of the institute. And my best wishes are to Harsh, Vivek Harshji, who's going to ask and moderate some questions. I hope the participants of this very important webinar are given the opportunity, Vivekji, to present some of the questions, and you could then, bounce them off Parveenji and give them practical solutions in terms of what will happen. I think many preparers have questions. Sanjeev Bhai raised one of the very important issues of how the wage is to be calculated as a 50% of the CTC, as we call it in common parlance. But more importantly, I think also what is going to be very important is the way the companies, especially the larger ones, structure their entire CTC. And there you have optional allowances. Not everybody gets paid. Not everybody has the same salary structure. And therefore, looking at those 100,000 plus employees and then doing, of course, the assessment of what will be the impact, I think is going to be very, very crucial. And I hope, Parveenji, as your past role of being in the AASB, of course, as you touch upon the Accounting Standards Board, may also throw some light and guidance for our members from the audit perspective. I'm sure AASB will come out on a timely manner before the year end for what is to be done for these labor codes in terms of some additional guidance that they may choose to provide. But I think even as an auditor, I think, Parveenji, with your vast experience of how auditors would deal with it, I think maybe some part of your address, if you could deal with that, I'm sure, because today, as I went through that brochure that was sent across, I think we have invited not just practitioners in terms of the preparers, but also chartered accountants and auditors or reviewers on what roles and responsibility they will have to discharge in terms of this very significant change. But I think in terms of the impact, we've seen, of course, back in the day, foreign exchange and other standards coming in. I'm just talking about the impact which certain transactions have had, not just the upgradation of standards, because there you have a sufficient runway to prepare. You have the exposure draft. You are aware when accounting standard is going to become applicable, and therefore companies are able to better prepare and equip themselves for the change that is coming. It may have been revenue recognition. It may have been leases. So many things have changed over the past few years that I was in the council. And I'm sure other things will continue to change. But I think these are regulatory enforced changes. So there is no impact on our accounting standard in terms of how we would account for something or how the auditor would look at it. But I think definitely the numbers which go into making that assessment will see a huge change. And therefore, it is not just for the preparers, but for them to work with branches within the organization, HR in particular, going forward with actuaries and other agencies to make sure that this impact is accurately captured and then, of course, audited and reviewed by our chartered accountant members. But like I said, and I began by saying that Sanjeev Bhai and ASB has been doing a phenomenal job this year. I think these series give a great insight to our membership, understanding finer nuances, understanding and asking questions and posing issues that they will face starting now. I think we are already in January, and the 45-day timeline for a lot of limited reviews have started coming in. So yes, we will see what industry does and how well they are able to equip themselves. But I think the role of ASB in first setting the expectation, and then second giving out guidance in terms of the FAQ and now this webinar, I am very confident that you have been very timely. I would say absolutely bang on in terms of the performance. And my compliments, as I said again, to entire ASB team led by Sanjeev Bhai as the chairman, the offices here and the secretariat, who I'm sure have also put in a lot of effort to get this to this place. So my final parting thoughts to all our chartered accountant colleagues who have joined, either as preparers. I think there are times every year that something or the other very important happens, and I think in the accounting world for at least this financial year, this is going to be a major material change that will happen in a lot of the numbers, especially for companies which have a high employment. I can think of IT, I can think of other companies where this is one of the major costs in terms of the line items on the income statement and P&L. So very important for us to assess that as preparers, and of course to my chartered accountant colleagues who are auditors and reviewers. Important for us to make this assessment. Yes, currently at a review level for December, but plan ahead, plan for March when you will have a full-fledged audit, and what is the responsibility that all of us will have to fulfill, what are the assumptions that we'll have to do, and of course, a lot more additional time that you'll have to budget for your audits, because there is a change in the salary structure, and therefore the assumptions, as we've always done for the standards on employee benefits, we have tested some of these assumptions in the data, and I think that responsibility will arise and increase going forward. So yes, it's more work, but we shouldn't be complaining. I think it's a very important change. Our labor laws haven't changed for so many years, and this is the government's intention of reform going in the right direction. And let us all also put our best foot forward and see that as preparers or as reviewers / auditors, we fulfill our role with the fullest of sincerity, having clear understanding of these impacts, and making the best utilization of all the resources that ASB has given to us. Once again, compliments to everybody. Thanks to the speakers, and special mention for all the people who have logged in and who are keen to make sure that they are on the right side of these changes. Thank you very much.
Thank you very much, Aniket Bhai. Thanks a lot for your kind words and for your insights on this. And of course, as you said, as you rightly said, some more time will need to be factored in this time for review, and of course in the annual audit, the basically the test of controls and the substantive test would also undergo a change. The provisioning will need to be seen. The actuarial valuations may also be impacted. So all that impact needs to be factored. Thank you so much for your continued leadership, Aniket Bhai. And with this, I hand over the screen to Harsh and then to Praveen ji. Over to you, Harsh.
Thank you, sir. It gives me immense pleasure to share the platform with all the esteemed leadership team. I would like to introduce our guest faculty today, Praveen Kumar, sir. He's chartered accountant with 31 years of experience, and he holds diploma in information system audit and certification in IFRS. Currently, he is the lead partner in the ASA Associates and LLP, which has a workforce of 700 plus people. He has experience of working on various risk advisory and fraud investigation and giving transitions services to the various clients. He's also an eminent speaker in various national and international forums, including ICI, ICSI, MCA. He has written various articles and has been invited to present papers at various reputed institutions of national and international levels in in companies in countries like Japan, Singapore, etc. So with this, I welcome CA Praveen ji to take us and enlighten us on the topic of the new labor law codes. Over to you, sir.
So thank you very much. Really grateful, Sanjeev ji, for giving this opportunity to share thoughts. And so glad to meet Aniket Bhai again after a little bit of time. We have been really involved in some interesting projects. So thank you very much. And I'm also thankful to the Accounting Standard Board, the staff, for making it happen at such a short notice. So, what I'm going to do with all of you is I'll be sharing thoughts on these new labor codes and the accounting impact. So, as you are aware, it's a very, very quick initiative. A lot of study is being done. Accounting Standard Board has come out with the FAQs, which are key guiding factors for all of us, the accountants and the auditors. So, in this 1 hour or so, what I'm going to do is I'll share a little background of these codes and key features, and then I'll quickly jump onto the FAQs. Primarily, these 7 FAQs, they are giving guidance on which are the key areas you need to be careful about when you are doing accounting and impact of these labor codes which are going to have on your financial statements. So this presentation will run for approximately an hour or so, maybe 5-10 minutes here and there. And then in the meanwhile, I would request you to put your questions on the chat box or in the Q&A section of Zoom. So maybe we can collect all of these and then we will have some time to discuss these questions and answers. So probably some of your questions might be very, very technical, very, very detailed. We'll try to address those, but as we say in every webinar, so whatever we share, in the webinars as faculties, we share our own thoughts and our own perspective, and these are our own views. In case you need to take any call or in case you want to take any decisions, we would always we recommend that you should refer the literature which is officially issued by the institute, the Accounting Standard Board, and you should refer only that literature for your decision making process. So this is the disclaimer we give before starting any discussion on any of the technical matters, that these views are personal. They do not represent views of the institute or our firms where we are belonging to. So what happens, in these new code? So as Sanjeev Bhai has also mentioned, these codes, there are 4 labor codes which were announced that they have become applicable with effect from 21st of November 2025. These are code on wages, which is called Code of Wages 2019, then Industrial Relation Code 2020, Code on Social Security 2020, and Code on Occupational Safety, Health and Working Condition Code 2020. So basically, all of these, they are together called as a labor code. So there are few characteristics. These are all to be read together, and uh, there'll be single definitions for all these codes. Like for example, Sanjeev ji he was sharing a definition of wages. So wages is now same definition for all these codes, which is basic plus DA. We used to have different nomenclature in different acts earlier, but now it all will be called wages. And as mentioned, that it has to be minimum 50% of total payout. So these codes will have rules which will be published as the time goes by. But an interesting transition provision is till the time those rules and those details come out, the previous regulations will remain in force to the extent they do not have contrary provisions to these codes. In case they have, then these codes will prevail. So people may say that, okay, we do not have the rules and this particular state has not given the rule, and what will we do in the meanwhile? So your previous rules will remain applicable on these. So they will be effective from 21st November 2025. Basically, all these four codes, they have rationalized and consolidated 29 existing central level laws. And this is a historical milestone. Also remember that there are still some of the acts like Shop and Establishment Act, they still remain in force. So it's not that everything is gone. I'll discuss with you which all have been which all 29 acts have been taken into account and have replaced by this code. So why this kind of a reform was required? What was the need? There were many labor laws, and it was famous that Indian labor laws are very, very difficult, very complex. And there was a discussion happening around ease of doing business in India. And this was a major hurdle that Indian labor laws are very complex. A, there are different laws. B, then there are different regulations, and then the complexity of various states. All states will have their own regulations. So there was a need to simplify those, not only for people who are working as business people, or we call it employers, but also the companies or the entities or the groups which want to establish in India. They wanted to have a little more clarity on this. So basically, our economic and industrial environment that had become so complex, so there was a need to have this kind of reforms. There were a lot of like 29 laws were fragmented, and there were many regulations which were outdated also. There were a lot of compliance burden for employers. Employer would need to go to various regulators to get themselves registered and then comply with the various requirement of these regulations. So it was a requirement, it was a demand of this community, all the industry community, that we need to have these reforms. Basically, when we move in direction of Atmanirbhar Bharat, and there are many other initiatives taken by the government of India, this is also one of the key demand of the people, not only from employer side but from employee side also. There were a lot of people who were working on contracts. They were you might be using those delivery applications, Zomato, Swiggy, and all. And there were a lot of people moving around, and they were working. So these people also wanted to have a little more clarity, or they wanted to be. There was a demand of these workers to be included in the mainstream. So before I go to the accounting part of it, it's very important for us to have an understanding that what are the key characteristics of these codes. And then once we understand that and the concept behind it, it will be easier for us to take the impact of this change in our accounting, in our financial statements. And if we are doing the audit, it will be important for us to know the background. So this code one, which is Code of Wages 2019, there were four laws: Payment of Wages Act, Minimum Wages Act, Payment of Bonus Act, and Equal Remuneration Act 1976. So basically, all these four existing laws, their provisions have been simplified and consolidated into this particular code. It primarily rationalizes and strengthen the workers' right. and it is promoting simplicity and uniformity. Code 2, which industrial relation code, which was talking about there were different laws related to Trade Union Act, then Industrial Employment Standing Order, and then the Industrial Dispute Act. These three acts have been combined and amalgamated, and in order to do rationalization and simplification, this code number 2 has come into play, which is called Industrial Relation Code. So this code, there is a basic understanding is that the survival of worker is basically depending on the survival of industry. So if the laws related to trade unions and condition of employment and settlement of industrial disputes, all these kind of issues, they needed a little more focus and attention. So being part of Industrial Relation Committee of one of the very renowned chamber in India, I used to have this discussion. This was a major challenge with the employers about how to deal with these situations and how they can uh, they can have a smooth functioning in their premises or their plant. So this was a need of the hour. And then the third code is code on social security. So basically 9 different social security acts have been combined. Employees Compensation Act, then Employee State Insurance Act, then Provident Fund and Miscellaneous Provision Act, the Employment Exchanges Act, Maternity Benefit Act, Payment of Gratuity Act, Cine Workers Welfare Fund Act, Building and Other Construction Worker Welfare Cess Act, Unorganized Worker Social Security Act 2008. So when you go to social media nowadays and you try to look into the YouTube and listen to the talks being given by so many people about these codes, I think this is the first thing they are talking about. Not only ease of doing business for the employers, but basically social securities to all workers, which is these includes the gig and platform workers, which includes unorganized sector, maternity benefits, uh, digital system and facilitator. So all these people, in order to recognize their efforts and to recognize that they are also working as employees. So this is something which is being spoken about. A lot of appreciation is being received because of these provisions, because of this code number 3, because not only it is taking care of social security, but also, the benefits to all sections of society, irrespective of their gender and irrespective of their positioning. They should all be treated as same. So there are provisions which say that, okay, now 4 days a week work can be done depending on the kind of working hours you are going to spend. And then the female employees, they can work late into the night shifts also. And they are, there are certain provisions for taking permissions and but it is this code is facilitating equal opportunities to the women and other sections of the public, where this code of social security and this particular code is also going to have the maximum impact on your accounting also. Uh, we uh, we are aware, and this point was touched upon by Sanjeev ji also, that the Gratuity Act and these changes which are being done. These are very, very significant ones. Not only taking care of these employees, but also will have an impact on your financial statements. because now the people who are in fixed term employment, the gratuity, in order to become eligible for gratuity, you will need to have, 1 year of employment instead of 5 years. So there are many provisions which need to be looked into detail, which needs to be studied, which needs to be elaborated, and which needs a little more clarification also. But as far as accounting is concerned, one thing is very sure, that this new code will have an impact, whether on materiality level. You will have to see how material it is, but they are going to have an impact on your financial statements. The fourth code is about occupational safety, health, and so this is basically uh, um, taking care of 13 different acts. They were amalgamated and simplified and rationalized. So they include the Factories Act, the Plantation Labor Act, the Mines Act 1952, working journalists and other newspaper employees related provisions, the Working Journalist Act, the Motor Transport Workers, BD and cigar workers, contract labor, sale promotion employees, interstate migration women, cine workers, cinema theater workers, dock workers, building and other construction workers. All these acts which were there dealing with those particular segment, they have all been combined and put into these codes, where safeguarding workers' right and safe working conditions is the main criteria. So let's look at the characteristics or the features of these codes. So one is, like I had mentioned earlier also, that there is a minimum wages for all employees. So this statutory right is given in this code 1, whether you are working for organized sector or you are working as unorganized sector. So if your company or your client where you are doing the audit, they are into the business of organized sector or unorganized sector, there has to be universal minimum wages. So as auditor, you will not only see the accounting impact in terms of numbers, but also your no clar, I mean non-compliance. You will have to prepare, and you have to have those kind of checklists where you will be looking into whether the client of yours is going in the direction of non-compliance or not. People who are doing internal audits, their work is really going to be interesting now henceforth, because many companies, they may have set rules and set procedures and set processes in their organizations, whether they are taking care of the new requirements and how they are going to bring those kind of changes. So introduction of floor wage, this concept has been brought in. Then wage fixation criteria has been given, which will be dependent on skill level, geographic area, and job conditions. One thing which they have very clearly mentioned is that there will not be any differentiation when whether you are a male worker or a female worker. So this discrimination of wages because of the gender identity, that is prohibited now, and wage payment has to be done in a timely manner. That means before 7th of the month you have to give your wages. Overtime compensation have been clearly defined as twice the double rate. So when the companies are making provisions for overtime compensations, though you as accountant will need to be careful about, your provisioning has to be done in such manner which will take care of this requirement. Then employers' responsibility, this includes the companies and the firms also. They are liable for wage payment, proprietors, entities accountable for. So there are many people uh, in our community, chartered accountants, who provide offshoring service. So you need to be really careful when you are doing outsourcing service or you're getting those outsourcing services done. So you need to be careful. The definition of employer, it includes the main head also, it includes the CEO also. So employer responsibilities have been very clearly defined. An interesting change is that that inspector is now called inspector cum facilitator. So this is in direction of ease of doing business, and it is giving comfort to the employers that the people who were inspectors, they will now be facilitators as well. So their role is being enhanced to help and do handholding of the companies in order to improve compliances. And overall background is that many places uh, in all those 29 acts, there were provisions related to imprisonment and those kind of tough provisions were there. They have been replaced, and many places they have been brought into civil side of it. That means only the penalties will be levied. It gives a breathing space, because earlier any small little non-compliance and the employer or the head of the employer agent company would be having a fear that he might get imprisoned. But now, if the non-compliance is routine level or small, then probably only the penalty will be there. And many places they have rationalized the penalties also. I mean, if the penalty was very small, let's say 2000 or 500 or so those have been brought into the current level. Like many places, the penalties have increased up to the level of 5 lakh rupees or so, because earlier people were taking it for granted. Oh, it's a very small penalty, so we don't bother. So the compounding of offense, they have brought in a concept that there can be compounding which can be done within 5 years. So the non-imprisonable offenses can be settled, and repeat offenses within 5 years need to be compounded. And decriminalization of offenses is also one of the key feature of this wages. So the industry, the people, if you are running a consulting firm, you also are part of the industry. So many offenses, they attract only the monetary police fines now. And this is basically rationalizing the requirement that small little non-compliance or overlooking something here and there will not land you into imprisonment. So this is your code of wages, and now we move to industrial relation code, and maybe it is more relevant for the people who are into industry. But it is when you are doing the audits, or you need to understand that many times there are time-bound contracts with full parity in wages, and so you have to be careful that gratuity eligibility becomes applicable after 1 year of their employment, only for the people who are into fixed contracts. So that means you will have to now get that information, that how many people are in their employment on a fixed term contract. Otherwise, so for other people, there are similar kind of rules are still there, 5 years, and for journalists there are 3 years. So there are different detailing which is there in this industrial relation code. Uh, there are, some fund related provisions are there. So industrial establishment will need to contribute into the fund and will be credited to the worker's account within 45 days in case of retrenchment. Now, this trade union, this was a gray area where, the clarity has come now. So in case your organization has got more than one trade unions, registered trade unions in your organization, so you will need to have one which is having more than 51% representation of employees. You will need to recognize that, and that will be, your negotiation related trade union. But in case there are more than one and none of them is holding 51%, the provision says that, okay, Jen, you will make a council where every union which is having more than 20% will be having representative in that council, and then you will be having a negotiation with them. Then workers' definition have been expanded now. There are sale promotion staff, journalists, and supervisory employees, which are earning up to 18,000 per month, rupees 18,000 per month. They have also been included. And the industry definition has been broadened. So all systematic employer-employee activities are covered there, regardless of what are the profits, what are the capital, all those protections are there. So in grievance committee, it is like I mentioned that this gender related issues have been really brought into focus. So mandatory proportional representation in the grievance committee for women, and the gender sensitive redressal will be required. Uh, to uh, to ensure that the employers who are running medium-sized firm companies, so they have increased the threshold from 100 to 300 employees in order to ease the compliances. Then the work from home provisions are also there. I know many of you are smiling on this, but there is a requirement which was felt that those people who are working from home, what are the provisions relating to regulating those employees. Now, this is permitted under this code, but it has to be with the mutual consent, and flexibility need to be there. Then the tribunals, two-member tribunals are there, and then there are direct tribunal access, and then mandatory 14-day notice is required to promote dialogue and minimize disruptions. Like for the strikes, in case the union wants to do a strike or a lockout position is there, minimum 14 days notice will be mandatory. And as you are aware, we are living in a transitional world where everyone is moving in artificial intelligence. So maybe some of the lectures are given by AI bots on this tool also, and on these codes also. But basically, this code too is facilitating electronic record keeping, registrations, and communication for transparency and efficiency. Many times, people who are doing auditing, they use auditing software, and so this particular code, the industrial relation code, allows and permits and facilitates those kind of electronic record keeping. So we move to code 3, which is code on social security. Now ESIC is applicable pan India, and notified areas restrictions are removed now. Less than 10 employees. If you are running an organization where employees are less than 10, you can still voluntarily, get yourself registered for ESIC. But it's mandatory for, some occupations and plantation workers. So your EPF, Provident Fund related proceedings and inquiries, there have been in the code. There are timely resolutions. There are there were provisions for sumoto reopening, so those have been abolished. The proceedings need to be finished within 2 years, and the recovery proceedings will be capped at 5 years. So there are provisions which are saying that, okay, we will bring in efficiency in the Department of Provident Funds. The appeal, if somebody is having a dispute, they want to appeal, where earlier they were paying 40% to 70% against EPFO. Now they will need to deposit only 25%. And then a self-assessment for construction, cess. There will be some kind of self-assessed liabilities which will be there. So when you're doing accounting or when you're doing auditing, this particular provision you will need to be careful about, that self-assessed liabilities need to be there. And once, if you're doing the audit, then you need to see how the self-assessment was done. And if your client is in business or other construction work. Then this is the next point is very important. The aggregators are required to contribute 1 to 2% of the turnover for Social Security. And this is they have included the gig worker and platform workers as well. And then dedicated fund for scheme covering unorganized gig and platform workers. There need to be dedicated fund. There is a provision that compulsory insurance will be done. So as you could see that the more I am dwelling into the characteristics or key features of these codes, the more accounting and auditing related issues are coming up. So we need to be really asking the clients to go deep, take the help of maybe an external expert, or to take help of or to create a team which will be looking into all these requirements. Then the code on Social Security has, as I had mentioned, that whatever the previous definitions were, the wages uniform definition has been given. So the exclusions, like in addition to the wages, whatever you are giving, they are capped at 50% of total remuneration. So that means if you do a reverse calculation, then 50% of total remuneration will be your wages. So this is in order to bring that consistency in gratuity, pension, and social security related calculations. So I remember many years ago when I was doing my chartered accountancy course, and we were reading, we were preparing for this examination, I think intermediate or final. And I was attending a class that time. There was classes being organized by the institute. So that lecturer, he asked us to remember what all is included in the definition of salary. And then he referred from some Hindi song. Only because of that, we always remembered that how complex is the definition of salary. You have to add this, you have to add this, you have to add this. उसमें थोड़ा गुलाब मिलाओ, उसमें थोड़ा ये मिलाओ, और then this is how it was taught to us, that you need to remember those definitions. Now it is easy. The students, you are going to be having just 50%. There's a complete wages. So don't need to remember different definitions of salaries in different acts. And we are talking about 29 different acts. So gratuity for fixed term employees, as I had mentioned, that 1 year of continuous service is enough for making the gratuity provisions. And this is where your accounting is going to get the maximum hit. And for those specific industries where they are getting work done from fixed term employees, you have to make those provisions. Then commuting accident are now covered if somebody is traveling between home to workplace. So it is in this code, it is mentioned that it will be treated that you are on a job. So accidents will during that period will be covered. So again, in this code, also decriminalization of monetary fines. So decriminalization has been done. Employers, if there are small little compliances here and there, but then monetary penalties will be there, and 30 days notice will be coming in case of non-compliance. So, when you are doing audit and you are looking at contingent liabilities of that organization now, or those small little disputes here and there, here and there, here and there, you will need to see the penalty provisions have significantly increased. So earlier they would say, no, 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 this is only imprisonment provisions and we are going to fight and we have certain cases. But now the penalty provisions are there. So you need to see what kind of impact and whether there will be any provisioning required in that area or not. So the first time offenses are compoundable, but then if you are having a repeated, issues, then there are different provisions. Then electronic maintenance of record is there, and then vacancies reporting has to be done. So I'm sure you're all aware that your article trainees now you have to have electronic records, and there has to be a improved way of reporting to the institute. I'm sure you are all aware of that. So this code 4 is about safety, health of the working conditions.
Sir, one minute. Sir, one question from my side in the previous code, if you allow, please.
So maybe we will just quickly finish it and then we will go to the
Sure, sir.
question and
Sure,
answer,
sure.
because the flow will, I thought that flow will be there.
Sure, sir.
So, so unified registration, one registration will be sufficient. So you can imagine a person planning to come to India, put up their factory or their office here, and they would go to 29 different places to get themselves registered. Maybe may not be required to get registered under all the 29, but many places they used to go and get themselves registered. But now only one registration will be required. So the provisions of establishment, even if it is one employee, which are engaged in hazardous or life-threatening occupations, they need to get registered. One license, one registration, one return. This is the framework which is reducing the redundancy and compliance burden. And uh, expanded migrant worker definition is also there, where the workers who are employed directly or through contractors, they are all covered here. Free annual health checkups. Now, this was interesting when I read that, okay, there will be mandatory free annual health checkups, and appointment letters will be required for transparency purpose. So imagine you are running an organization, you are running a chartered accountancy firm. So probably you need to also evaluate whether you will need to have that mandatory free annual health checkup or not, depending on some of the factors. Then women, they are allowed in all establishment, even in the night shifts, with consent, and safety measures need to be there. So media worker definitions have been expanded. All audio-visual productions, they will all be a working journalist and cine workers will be covered here. And at least 50% of fines the courts can direct, that in case of any injury or death, the court can give a direction to give 50% of fines to victims. Then contract labor reforms. This is very important one. and the threshold has been raised from 20 to 50 workers. All India license will be valid for 5 years, and the generation of renewal will be auto generated, and the the approval which will be treated, it will be a deemed approval after the period, and contract labor board has been abolished. Um, I'm sure many of the people who are into business or industry, they are smiling looking at this requirement, because this was a major issue for small and medium business people. Safety committees will be required. It will be 500 plus workers. And then again, the decriminalization and compounding is there. 50% of maximum fine and imprisonment uh, at 75%. Criminal penalties replaced with civil fines. And factory thresholds have been revised, where you are using power, then 20, and 40 when you are using without power. And 48 hours a week, it is permitted, but overtime will need to have twice the regular rate. But important point is that you have to have consent. Now, let us look at this FAQ, which was issued by the Institute of Chartered Accountants of India. So, in my slides, I will have only those extracts from the FAQ, which will have the question and the response and the conclusion as given in the FAQ only. Um, I would recommend that you please, when you go through these FAQs, they are so simple and so easy to understand, and it is giving absolutely straightforward answer. So please refer these. There are only 7 questions which have been addressed in this FAQ, but I am very sure that there will be more questions when the companies will go deep into it. Then when they will have their impact studies done, when they will have their checklist on compliances and on the accounting impacts. A lot of other questions will also come into play. And as the time pass by, we will probably have more clarifications. But so this is, this FAQ is really helping you to understand what kind of position can be there. And this FAQ also gives you a glimpse of the literature, which is the accounting standards. So, as you are aware that accounting standard 15 and Ind AS, both Ind AS and accounting standards, both can be applicable on your entity, depending on the threshold and whether you are a listed company, whether you are implementing Ind AS, or whether you are. So both kind of answers are given in this FAQ. So the first question talks about the gratuity liability. It is likely to increase like because of below requirement of the labor code. So there are, so one is the new labor code requires at least 50% of total remuneration, which will be a basic pay, DA, and retaining allowance. They will be together called wages. Gratuity is to be calculated based on last drawn wages, which must represent a minimum of 50% of total remuneration. So this is one provision. Then B, previously gratuity was payable only after 5 years of continuous service, right? 5 years. But under the new labor code, the people who are on fixed term employment, their gratuity will qualify for after 1 year itself. So, how the entity will need to recognize and measure the gratuity liability. So, I would like to draw your attention to an to a case which has happened, a case study. In February 2011, Reserve Bank of India had revised some gratuity norms for the people who were past and present employees of all the banks. And at that time, in that circular itself, Reserve Bank of India mentioned that the impact of this can be amortized over a period of 5 years. So at that time, there was only accounting standard 15, which was in play. So when the experts, the accountants, they looked at the accounting standard, they said that in case this kind of situation happens, we need to take into account all the additional liability which comes up because of this additional burden of expense. And they said that according to the accounting standard, all that expense has to be booked as expenses in P&L account in that very year. So now the regulation, the circular itself is saying that please amortize over a period of 5 years. So now there was a challenge in front of the accountants. If they follow the accounting standards, they had to book all the impact of that loss, had to take it to the P&L. But if they follow the RBI instructions, they have to take only 20% of that. So they said that what is going to be our auditor view. So auditors look at that and they said that it is a very complex situation because in the audit report they have to mention that the financial statements which are being prepared here they are complying with the accounting standards. Period. But these financial statements are taking only 20% of that as an expense. So the auditor said that we will have to mention as a qualification that accounting standard 15 was not followed in this particular case. Maybe it is because of the reason, whether because of the regulatory instructions. So the people who were in the accounting, in the banking industry and the auditing, so all these people were in a fix. Bankers said that we do not want a qualification in our balance sheet. RBI said do it 20% in this year. You tell us if you want us to apply AS15 and put all those expenses in P&L, we will do that. But then who will, then you will say that there is a non-compliance of RBI instructions. If we agree to RBI instructions and if we take 20% in this year, then you are saying that you will qualify the report. So in both cases, whether we agree with this or whether we don't agree with this, you are going to qualify the report. We do not want that qualification in our report. You tell us what is required to be done. Then the auditors were also in a fixed, and there was a dispute. It was remember, it was February, and then the matter went to the institute, and there was a very interesting announcement which was issued by the institute resolving these issues. They said that okay, the RBI instructions need to be followed by the banks. They will have to take 20% only into the P&L, and they will need to amortize these expenses over a period of 5 years because it is instruction of RBI. So you need to comply with the instruction of your regulator. But when it comes to the auditors, you need to put a comment in your report not as a qualification but as emphasis of matter paragraph, starting your line with that without qualifying our report, we have to mention that there was a instruction from RBI and this provision has been done to the extent of 20% of the total expense, and then the bank has actually complied with the requirement of the Reserve Bank of India, but there is a deviation from AS15 in accounting treatment of this. So this emphasis of matter paragraph was suggested by the institute in an announcement, a historical announcement, and I think what is happening today, it brings us to the similar kind of situation. The new labor codes have come. There might be very, very significant impact on some of the industries, and these codes, the accounting standards, they require you to do accounting in a particular manner. I will discuss, how the FAQ is giving response to this requirement. So FAQ says that the increase in gratuity liability because of this new labor code should be accounted for under AS15 if you are using accounting standards. or Ind AS 19 if you're using Ind AS. And they are treated as plan amendments and required to be treated as past service cost. And there is an analysis in the FAQ. Three paragraphs have been quoted from AS 15. I am putting it in front of you. Para 7.20. Past service cost is the change in the present value of defined benefit obligation. Rest you can read it yourself. Past service cost may be either positive or negative. So then there is a paragraph 94 of Accounting Standard 15 that this talks about the measurement. So defined benefit liability under paragraph 55, an enterprise should recognize past service cost as an expense on a straight line basis over an average period until the benefit become vested. Then paragraph 95, past service cost arises when an enterprise introduces a defined benefit plan or changes the benefit payable under an existing defined benefit plan. So after quoting all these three paragraphs from AS paragraph 8 of Ind AS 19, it says that service cost comprises past service cost, which is the change in the present value of defined benefit obligation for employee services in the prior periods. So please remember that these codes have become effective 21st of November 2025. So that means when your year will end, if you have those fixed term contract employees and their 1 year has passed, you will need to have that kind of provisioning. So the question is how it will get resolved. So in paragraph 103 of Ind AS, the entities should recognize past service cost as an expense at the earlier of the following dates when the plan amendment occurs or when the entity recognizes related reconstructing cost or termination benefits. So what is the conclusion given in this FAQ number 1? Is increase in gratuity liability under the new labor cost is a past service cost. So that's there is no ambiguity. And in Ind AS 19, it is recognized immediately in the statement of profit and loss. And under Ind AS 15, vested costs are recognized immediately and unvested costs are amortized. So you need to also keep in mind there can be two situations. One situation is that the entity is just taking the same salary structure and the salaries are getting increased over a period of time. Second situation may be the employee's salary structure is being rebundled. So you have to take into account and look into this accounting from close eye, and you need to see whether this is a change in policy or it is change in estimation. So when you are giving your data to the actuarial for getting your calculations done, so you have to distinguish if this is a change because of just routine changes or promotions, or it is changes in the policy of the company. So you have to take into account whether what portion will go into OCI in case of Ind AS and what portion will go into P&L. And you have to be very careful in giving those details to the actuarial, the people who are experts in actuarial calculations. And if you are doing the audit, you will have to closely monitor and see and review what actually was given as assumptions to the actuarial and what were changes which were done, in order to meet this regulatory requirement. So two dimension. One is if you have fixed term contract employees, the gratuity of will get your provisioning will get hit immediately after completion of 1 year. Of course, you will have to go to the actuarial. If your normal 5 years gratuity related employees are there, then there can be two situations. One is your normal increase in employment, your assumptions, and second is your rebundling or restructuring the salary packages or so this, as far as this FAQ is concerned, a very clear guidance is given that this past service cost need to be immediately recognized in the statement of P&L. Application of this new labor code is required to be recognized as an expense in the statement of P&L as per requirement of the relevant applicable accounting standards. So when you are doing an audit, you also need to uh, ensure that the client has done appropriate disclosures of what actually has happened, so that when the users of financial statements, when they are looking at the financial statements and when they are looking at notes to accounts, they need to have a clarity what actually happened, what were the changes in the assumptions, what were the so whether it was a routine actuarial assumptions or whether it was a change. So you need to take your calls accordingly, and you need to make your audit reports, and you need to, in case you need to have a discussion with the management before the March ends, because many times it is prudent that auditor will do their review, will do their control testing beforehand, will go and have a discussion with the management that what are they planning to do in case these situations are there. So please have your accounting treatment decided, and your accounting notes need to be prepared, especially the companies which have got large workforce and companies which are having fixed term contract employees. So apart from other checklists which are coming from when we were looking into the characteristics or the key features of those codes, there can be other accounting issues that may also come up. So question number two is that and then there is a case study which was given. Assume that under ABC is any name which FAQ has given. Salary structure for employees before enactment of new labor code. So basic salary plus DA was only 35%. Now ABC decides to revise the salary structure because of this code, and they decide to grant 15% increase in total remuneration of all the employees. So that means previous estimate was 12%. Now the estimate has increased that, okay, we will give 15% increase. So this remuneration to basic pay, so this entire increase the company has decided that will be given into the basic salary instead of attributing increase to all component. Thus, for example, total remuneration prior to the change was 1 lakh, which has become 1,15,000. So, can ABC Limited treat salary changes as change in actuarial assumption? The response as per the FAQ is the changes in the wages of 22,500 has got two component. One is increase in salary, which is 15%. Previous estimate was 12%. And change in salary structure. So the first component is change in the assumption, and the second component is a planned amendment. So they should identify impact of these components separately and treat them accordingly. And that is where the complexity of accounting has come into play. So it may seems very logical and normal that the company says that, okay, whatever increase we are giving in the salary, we will be increasing only the basic pay so that we are able to meet the requirement of definition of wages, which is 50%. So whether there is a change in the actuarial assumption and whether there is a plan amendment. So you need to do accounting uh, accordingly. So where the entities choose to restructure salary, there is no real increase in the salary. The entire increase is attributed to past service cost. and past service costs, how it is to be accounting for. So question number 3 is saying that whilst the new labor codes are effective from 21st November, and this is an interesting question, the supporting rules are yet to be notified. But on legal evaluation, the wages definition under the new labor code is applicable immediately. And the employee whose last working day is on or after 21st November 25, they need to be paid gratuity as per the requirement of the new labor code. Considering this legal interpretation, whether the listed entities having 31st March as a year ending need to recognize whether they need to recognize additional gratuity obligation. That means for the year ending March 2026. So that means if an employee is retiring after 21st of November, so there can be a question on 21st November or after 21st November. That's another fine detailing. But let's say that after 21st December, if a person is retiring, then what will be the position? Whether the company will need to recognize that additional gratuity obligation. So both Ind AS 34, which is interim financial reporting, and AS 25, interim financial reporting, they require that an entity shall apply the same accounting policy in its interim financial statement. And, except for the accounting policy, which is, so if there are changes happening, so you can read what is given in the FAQ. The frequency of entities reporting annual, half yearly, or quarterly shall not affect the measurement of its annual result. So that means to achieve that objective, measurement of interim reporting purpose shall be made as year to. So that means as per paragraph 39 of Ind AS 34 and 38 of AS 25, cost that are incurred unevenly during an entity's financial year shall be anticipated. So basically, during your quarterly reviews, you need to see that those anticipations or those estimates are done. So it is very important that we read these FAQs carefully. So the conclusion says that considering the above requirements, increase in this gratuity liabilities need to be recognized in interim financial statements or results also. And that's where your challenge. 31st December has already gone. You are getting ready for limited review reports, and your client says that, oh my God, this is really tough. We cannot have an estimation so quickly. We are having thousands of employees. Some of them are fixed time, fixed contract. Some of them are, so we do not have time for this. Then you need to really understand what kind of impact it will have on your audit reports or your limited review reports, because the financial results are going to be published for, let's say, December. Then question 4 says whether increasing gratuity liability arising from new labor code should be treated as an adjusting event or non-adjusting event, because your 31st March 25 has gone. Some portion of this will be related to those periods which are before 31st March 25, and you have not yet closed the audit of those 25 numbers. What do you do now? The code has come. March audit is still going on. It's delayed. Or the company is having, let's say, August 31st as the year end. So your audit is yet not completed. Now, what do? There's an event which has happened. There's a code which has happened that has got a significant impact. So the question is in the FAQ whether whether this will be treated as adjusting event or non-adjusting event. So adjusting event would mean that you will need to go and change your balance sheet, financial statements, P&L, because this now the new code has come. Or unadjusting means you will need to probably make only a disclosure. So what is the answer, what is the response in the FAQ? The enactment of new labor code is a change in law occurring on 21st November. The obligation arising from change in the law was not existing on the earlier date. So the enactment of labor code and its consequential impact is non-existing event. So you have got a very clear answer from the FAQ itself that this is a non-adjusting event for the periods which have ended prior to 21st November. But in case your period ending is post 21st November, that means you are making a balance sheet which is for the period or for the year ending 30th of November 2025, then of course you will need to make an adjustment in the accounting. So conclusion is that though treated as non-adjusting event, entities should make appropriate disclosures. This is important. Disclosures need to be there. So, and that is the whole purpose because of which this FAQ is important for all of us. Like, events after the reporting period requires disclosure regarding the nature of event and estimate. So similar disclosure is required under paragraph 17 of AS4. Now, next question, which is question number 5, is saying that like gratuity, these codes are likely to have an impact on leave obligation for the entities. How should an entity account for changes in the leave obligation arising from the new labor code? So the response is that leave obligation is treated as short-term or other long-term employee benefit obligation, as the case may be in both AS as well as Ind AS. So they require past service cost in respect of other long-term employee benefit to be recognized immediately. So the way response is that, this is middle line in the bold, which says that in India, whether you are implementing Ind AS or AS, you require past service cost to be recognized immediately. So AS15, does not allow amortization of past service cost on account of changes in other long-term employee benefit obligation, even for unvested benefit. Hence, any change in the leave obligation arising from new labor code is recognized as an expense, and that will be immediately. So next question is, can an entity present additional expense resulting from increase in gratuity or leave obligation due to the new labor code as an exceptional item in the statement of P&L? So this question was asked by many people that, okay, this is not normal. This was not expected. So can we show it as exceptional item in the statement of P&L? So Ind AS Schedule 3, it mandates a separate disclosures of exceptional item. This is the response which they have given. So although the term exceptional item is not defined in the Ind AS or Schedule 3, but Ind AS 1 provides guidance on material items in paragraph 85, 86, 97, 98. So it mandates the presentation of additional line items, headings, and subtotals uh, in the statement of P&L where necessary for a clear understanding of financial performance. So basically, you will have to see the materiality and nature and function of income and expense. So paragraph 97, so FAQ has given that it requires when item of income or expense are material, the entity shall make a disclosure of its nature and amount separately. Now, what is material? Now that will bring the subjectivity, right? But you as auditor or as an accountant, you will be aware what materiality concept is. It is one of the key characteristics of our framework where materiality is taken into account. It is all your financial statements and all your auditing procedures. You have to have that concept in mind, which is materiality. So write down of inventories to net realizable value or of property, plant and equipment to recoverable amount. So this is all, they have given uh, disclosure items in paragraph 97. And then under Ind AS 1, information is material if its omission or misstatement could influence others' decisions. So that means they have defined it differently. So it is said that if you omit that and it based on its nature, magnitude, or both, so it says that not all material items are exceptional. So maybe there can be materiality impact, but it's not necessary that all of them will be exceptional. So similar principles will be applied in Indian GAAP also. So now the conclusion of FAQ is, and of course, materiality remains a subjective term. A change in gratuity or leave obligation due to new labor codes may be considered not non-recurring, and they may present it as an exceptional item, regardless whether you, depending on the materiality, whether you show it as an exceptional or not, but your appropriate disclosure need to be made to explain the impact of new legislation. So you understand how the conclusions have been arrived at, keeping in mind the main objective of the financial statements as defined in the framework itself. The main objective is that these financial statements are prepared in order to help user taking a decision. So who is the user of these financial statements? Users can be your preparer of the financial statement, the management, the bankers, the people who are giving fund, the bankers, the employees, the regulators, all those people, or the investors who are looking into the financial statements. They need to, so their these financial statements need to help user in taking a decision. So transparency, consistency, materiality, these are all important factors which you need to take into account. And when you are making your financial statements, you need to ensure that appropriate disclosures are done. If you are showing it as an exceptional item, or even if you are not showing it as an exceptional item, you will need to see how material it is, what is the impact, and you need to make a disclosure how you have given the accounting treatment. So question number 7, this is the last question. And after discussing this, then we will go to the questions which you people have asked. I am very sure Vivek is looking very, very busy. He has got pages and pages of those questions. And but let's look at this question, and then we will discuss about your questions. So what will be the current and deferred tax implication of increase in? So this is a very interesting piece, which immediately the question was asked from one of my team members that, sir, it will have an impact on your deferred tax. There will be a lot of impact of that. So FAQ gives a response that no specific provision under the Income Tax Act for tax deductions or increase in the gratuity or leave obligation due to the new labor code. Tax regulations have not yet come. Such deductions are governed by the same provisions which were applicable to gratuity or leave obligations arising from the normal course of business. So that means maybe in future, or maybe during the budget announcements, there may be some provisions which may come. But as we stand today, the tax provisions remain same. There are no changes because of these new codes which have come. So contribution due and paid to the approved gratuity fund, so whatever is allowed already as a deductible expense on actual payment basis, in unfunded gratuity plan, allowed only in the year of gratuity being payable to the employees. In respect of provisions, it is allowed on actual payment basis. So considering all these requirements and requirements of Ind AS 12 of the income tax, the amount of increase in obligation to the extent deductible as business expense, so the position remains the same. So these deductible temporary differences result in recognition of deferred tax asset. Similarly, in AS 22 also, the position is similar, subject to the consideration of prudence as required under AS 22. These timing differences result in recognition of asset. So my last slide is, addressing what Aniket ji has mentioned. As an auditor, what are your key points, focus areas? One is you need to see whether the company has done those adjustments in quarter 3 or not, whether you will need to carry out your additional audit procedures, not only carry out, but also need to document those audit procedures in doing your limited reviews. You have to carefully review the disclosures. You will have to carry out your procedures in order to see which all out of these codes need might have an impact on your statement of profitability. Then accounting notes, whatever calls have been taken by the companies, they need to have management notes and their position which they have taken. You need to ask the management and insist that you want to have a copy of those management notes because of which they have taken those calls. And then your audit work papers need to be strengthened. Your planning, your execution, your conclusions. How have you planned specific to this labor codes? And when you are doing audit of the year end, my recommendation is that you please do your control testing and a review and a discussion with the management in the next coming few weeks itself, so that you can have an understanding of what management is thinking about. And then in case they are their views are looking aggressive calls, or you are feeling, you may need to have a discussion with the management. So your working paper will always come to your rescue in case some regulator asks a question. How have you reviewed? So keep in mind the concept of professional skepticism. This is the ground rule as we stand today. The regulatory focus on the auditing community is really very, very strong. The focus is very high. The matter is how the auditors are performing their audits. They are being closely reviewed. So you need to have whatever work you are doing, whatever audit procedures you are doing, please keep in mind to raise questions and ask questions and get answers to your satisfaction, all in your work papers, all in writing. And you need to have open channel of communication with those charged with governance. Standards on auditing require that. And you may like to have a planning meeting or a discussion with those charged with governance, but get your homework done before that. Look into these FAQs, look into the areas, depute teams which are looking into these labor code related compliances, make an assessment what kind of penalties, what kind of provisions might be required at various places. The task is tough. In case you are spending more time on these assignments, go to the client and ask, tell them that there is going to be a cost overrun. We had budgeted these many hours to do the audits, but our working hours have increased significantly because of these new provisions. So we may like to have a discussion on the compensation which you are going to receive. Have a discussion with the audit committee. And instead of complaining that my work has increased, you go to the audit committee and say that, okay, my work has increased, so my working hours, and hence my the fees which I had proposed and we had agreed, because of this exceptional item, we need to carry out more audit procedures, and I would like to be reimbursed for that cost which is going to be there. So, with this, I stop here, and I think we will still have 10-15 minutes for answering your question. I'll quickly do a recap. We looked at these four codes becoming applicable effective 21st of November 2025. We looked at which all 29 acts, they were simplified in these codes. We looked at some of the features in these codes. Many of the features would or may have an accounting implication depending on the industry in which you are working or depending on the industry where you are doing the audit. And then we looked at the FAQ, which has been issued by the Institute, giving answers to 7 key questions which were in the mind of almost every accountant. So, with this, I stop sharing my screen and I'll open it for Q&A and maybe hand it over to Mr. Vivek for questions.
Yeah, thank you, sir, for such a wonderful and insightful session. It was great to know the key aspects of the new labor code, and we have got lots of questions basis the detailed knowledge which you have shared. So I would start off with the questions now, sir.
Maybe
Uh,
what I will suggest is that
yeah,
if some questions are of similar kind, so
yeah,
maybe, expand the question in the first go itself so that we can address, in one go.
understood, sir. So I have categorized the questions accordingly. So probably
Very good.
that
Very good.
aspect will be covered. Yeah.
Excellent.
So, sir, with the first question, it says that if any companies have the salary structure which comprises of the variable pay or the performance linked incentives, how it will be dealt in the new labor law code in the definition of wages?
So, before answering, I would like to ask a question. How are you recognizing it at present?
Okay.
So, suppose you have a fixed pay of 100 and
Yeah,
variable pay of, let's say, 40.
correct.
How are you recognizing it in the present structure? So there can be different situations. There can be one situation where you would have taken the historical data and
Yeah,
you would have said that out of this variable portion, generally we pay approximately 80% of the variable, and
correct.
you would do estimation of that kind, and then you would
Hmm.
do your employee benefit expenses accordingly.
Okay.
That's one
Number one.
situation which presently you might be doing. Second, you might be doing is that, okay, fixed components is my salary.
Hmm.
You book that as employment benefit. And then the incentive, variable incentive, depending on, the specific criteria. So on 31st March, you would be knowing how much is the achievement of the target, and you will, or maybe in the first week or second week, you would come to know that how much variable exactly need to be paid. You will
Hmm.
book that as an employment benefit, right?
Yeah.
So, what you were doing presently, same thing you will continue to do in the coming period also, in
Okay.
the labor codes also. Only
Okay.
thing which you need to keep in mind is that 50% category.
Hmm.
So whatever the total remuneration is, 50% will be treated as a cost for
Basic.
the calculation of those actuarial, calculations. So
Social
50%
securities.
will be the wages,
Yeah.
right? So 50% which will be used as gratuity and leave encashments or various provisions which are going to be there. Earlier used to be like, okay, we will give only this much fixed, we'll give this in case this happen, we will give this is case, and total would go into 3 times or 4 times. But
Hmm.
now that cannot happen. It has to be 50% of the total remuneration which is being paid to the employee.
Okay.
Of
Understood, sir.
course, there will be estimations involved. There will be
Hmm.
management estimations involved. But when you are closing your financial statements, by that time you will have a full-fledged clarity on how much amount is being paid.
And sir, this 50% is only to be considered for the calculation of social securities. Whether it will be also replicated in the employees CTC, for example, if the if the total wages is 100 and the basic will become 50, so whether this 50 will also be taken for HRA calculation purposes, sir? Is there any clarification on this part,
So
or it is only
this is what the codes are suggesting. This is what
okay?
the labor codes are saying, that you need to have 50% as wages. But
Okay.
since the rules are yet to come, and so many legal interpretations are going to be there, we will get matured and we'll get answers of those questions, because when you read it just like this, it says that, okay, whatever total remuneration you are giving, 50% has to be wages. But then whether that will be, restructured, and this is one of the FAQ, right? That
Yeah.
if the companies decide, no, 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 we don't want to get into any of the hassles, we will
Hmm.
restructure our basic pay. We will say, okay, 50% is wages, rest 50% includes all this.
Yeah.
If the companies are doing like this, then there will be an accounting impact, for which we have seen what is there in the FAQ.
Correct.
So many
Okay.
companies, they may decide that, okay, we
Okay.
will not get into any of those companies. But there may be other companies also who will say, okay, for compliance purpose, we want to do this, like the
Hmm.
way you are saying.
Hmm.
But for our purpose, we will continue to do like this, or but they will have to do their own calculations and their own
Okay.
cost benefit analysis.
Okay. So let's wait for some more clarity.
Yeah, but as we stand today,
Hmm.
50% has to be wages. And
Okay.
as we read from the FAQ and we
Hmm.
read from whatever discussion is happening in the industry, it looks like companies are restructuring their salary
Okay.
structures. They are relooking at their salary structures.
Okay. So then there is one question which which has some practical aspect. So if there is an AS company, and if as any employee has completed only part of the vesting period at the date of past service cost. For example, if the vesting period is 5 years and 3 years have been completed. Now, on account of these changes, the additional cost impact is say rupees 100. Then whether this 100 will be amortized in the 2 years itself, or whether 60 will be booked immediately and 40 will be amortized in the next 2 years.
So that is what your, the answer in FAQ is given, that
Hmm.
how much is vested, how much is unvested, and how the accounting has to be done. But whatever you will give to the actuarial,
Yeah.
that has to be bifurcated in these two, and that has to be seen how the accounting has to be done. Some portion will go to the P&L, and some portion will go into the, in case India's, then OCI, and then so
Okay.
this is something which is really and guidance is given in the FAQ.
Okay. Then, sir, next is how to differentiate between fixed term employee and retainers kept on consultancy basis. Is there, sir, any demarcation given, like if the retainers kept on consultancy, they can also be considered as fixed term or not?
This is a this requires legal interpretation depending
Okay.
on the language of the contract.
Okay.
Many times the contracts are loosely drafted.
Yeah.
It may go in a direction of fixed term employee, but primarily what they wanted to look into, that many people who were employed only for 2 years or 3 years. So they wanted to cover those employees, right?
Okay.
But then, like you said, that retainers, how will they? So what is their, what is the kind of scope? What is the responsibility? Whether they will be covered as employees, whether they will be covered as contractual employees, whether they will be, or they are still like professionals. So you will need to go into detailing of those draftings, And I'm
Okay.
very sure the lawyers are going to have a good time.
Okay.
Even though the people will use ChatGPT and all to bring out
Correct.
those contracts, drafts,
Correct.
and giving right kind of prompts that it should not look like employment
Mm,
contract. But of course, the legal interpretations will be required. And not only in this particular case, but in other cases also. Uh, like legal interpretations will always come into play whenever we deal with any regulation, any act.
mm,
And it is not only in this particular case, even in our constitution, when the
mm.
constitution, although it is slightly out of the way, but I want to mention it here that how the interpretation will keep on changing. Uh,
Correct.
in the constitution, initially we had fundamental rights.
Yeah.
And one of the fundamental rights was that, to have land with yourself. You can purchase land, you can sell land, you can hold land. This was a fundamental right given. Then, there was a responsibility to the government under,
Mm,
those procedures. We call it DPSP. So that the government will take care of equalization. So what government did, they acquired some lands from people who were holding a large number of land. So these people went to the court of law. They said that, okay, you said that it will be a fundamental right to hold my land. And then you're snatching away my land, saying that I am holding so much and there are
correct.
this land to be given to the poorer people.
Correct.
So they went to the Supreme Court. Supreme Court said, yeah, 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 you're right. This is a
Mm,
fundamental right. Then after a few years, another person, he went to the court of law, and in Golaknath case, they said, but it is wrong. The government is doing their duty, so it is not fundamental right. So
mm.
the government agreed, no, 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 it is not a fundamental right. So there were many cases. So this was treated as fundamental right. I'm talking constitution.
Yeah, yeah, understood, sir,
And I'm,
understood. So
I'm talking
it will
Supreme
depend
Court.
on case to case
Yeah. And
basically.
then, 13 judge bench,
Mm,
13 Supreme Court judges were there. All of them
mm,
sat together and
mm.
decided on a case known as Keshav Bharti case, where they landmark judgment which they gave, and in which they said that you can change the constitution, but you cannot change the base structure of the constitution. All those. So every law, when it comes,
Okay.
there will be different interpretations. And if the Supreme Court has given an interpretation, later on a larger bench can review that
Mm,
situation also.
mm,
And we are talking only the labor codes here. So there will be legal issues. There will be legal interpretations. There will be people who will be challenging these codes. These labor codes also will be challenged. I'm very sure there are a lot of
mm.
lawyers listening, maybe listening to this accounting related webinar also, but they will.
Correct.
Yeah. So it is going to be a matter of legal interpretation, looking into the language of those contracts, whether they will get covered or not. I hope I was able to. Uh,
Yeah, yeah, sir.
clarify.
Yeah.
Yeah.
Sir, another suggested question with this, that whether the code also suggests minimum increment levels for the workers. Is there any section or anything which says that minimum increments needs to be given to the workers by the contractors?
I'm not sure. Whatever
Okay.
I have read, I have not read the codes line by line, but I
Okay.
have read various, experts, people, whatever they said. I didn't find this particular issue in that, but maybe
Okay.
when we will look into the fine tuning, or maybe when the rules will come by different states, maybe
Okay.
this issue might get addressed
Okay.
there.
Maybe, sir, the draft rules which we have been notified on 31st, there is something on this probably, but
Which state
I,
you're talking about?
so state, even I am not able
Yeah, yeah,
to.
yeah. So only two states has have given the Gujarat and one more, but some states have given the draft rules, but I think Bengal has not yet given the draft rules. I'm not
Okay.
sure, but
Okay.
this is a matter of. I think this will go
Okay.
into the rules, and I doubt whether there will be any minimum increment would be there
Yeah.
in the codes. I doubt that.
Okay.
I'm not very sure. So I'll be very upfront here.
So next is with the working hours. So it says that regulated working hours are now capped at 8 hours per day. So whether any intervening recess period will also be counted as working time? Any clarification on that? Whether the recess periods or any breaks, whether they will be part of this 8 hours or will be seen addition to this?
I think this question might have been asked by an article trainee.
Maybe, sir.
But when you read the code, it says 48 hours a week now.
Yeah.
So that means it's not 8, it can be 12 hours a day because you will be
Hmm.
working four days a week. It's a working hours.
Yes.
So I think uh, then again the legal interpretation would come into play.
Hmm.
But I
Hmm.
think
Hmm.
working hours means working hours. That's my interpretation, but I might be totally wrong. But my interpretation is 8 working hours means 8 working hours.
Okay. Then, sir, next question is that how many, 1 second, sir. So, sir, few of the questions you have already covered. So that is why I am
Yeah,
facing
yeah, yeah, absolutely. I'm understanding it. Yeah.
yeah. So maybe there is some repeat which we have already covered in the
Yeah.
FAQs. So it
Yeah.
says that given that in Ind AS 19 requires immediate recognition of past service cost, how
Mm.
should entities manage significant volatility in profit and loss arising from the first time impact of the labor codes? So this is the
That is where,
question.
yeah, yeah, that is where I shared that, RBI related case study.
Yeah, yeah.
That's where it is.
Next is, sir, since changes in leave obligations are required to be expensed immediately, how should entities evaluate whether such leave benefits qualify as short-term or other long-term employee benefits? So this probably, I think it is on the same lines how we used
Yeah,
to do it previously also.
yeah, yeah, yeah.
Anything, sir, for from your side
So
means.
I think there is an update that this Labor Ministry has given FAQ. They said
Hmm,
that performance-based incentive and ESOPs or
hmm,
variable part to the employee shall not be part of the wages. So
hmm.
that clarification, I had not gone through that, so I've got that flash which has come to me. Yeah. In that
Uh,
FAQ, it has been clarified variable portion will not be treated. Yeah.
So, sir, whether the new labor code also mandates company to mandatorily make some fund, because as of now
Yeah,
the
yeah, yeah.
company,
It
yeah,
is one of the requirement. Yes, they said it.
okay, okay. So this is the requirement.
Correct.
Yeah. So, sir, majorly these are the questions, and we are
Wonderful.
mostly on time also.
Absolutely.
So,
We should respect the time. Thank you very
yeah.
much. Thank
So,
you.
sir, anything from your side, or can we close the session for the day?
So only thing which I want to convey is that please be extra careful. Study more. Like I myself had missed out on that particular aspect of variable pays, where the FAQ had given an answer. So maybe you look into the literature and then take your decisions according to that. And whenever you are doing the audit, please be extra careful how the management is looking into these. Impacts. So, my only humble request would be to put your head down and study and then only take your calls. And if you're auditor, make your work papers very, very strong. Put down all your questions. Keep professional skepticism in mind. Thank you so much.
Thank you, sir. Thank you. It was very wonderful 2 hours of learning. The session was very insightful. So special thanks to you, to the chairman of ASB, and to the entire technical support team. So with this, we would probably like to end the session for the today. Thank you all the participants for joining, and let's continue our learnings. Thank you. Thank you, everyone. So
Thank
with
you.
this, we will close the session for the day.
Recording stopped.